Okay, so let's understand the meaning of full disclosure principle through an example first of all. So let's just suppose we have entity ABC and company. ABC and company has prepared financial statements for period 1st Jan 2020 to 31st December 2020. Like a generic type of financial statements we can have a very traditional format I'm going to use right now for sake of simplicity. Okay, so let's draw it another one. Liabilities and assets. Like capital, like capital of say 1k dollars, and short term debt 500k, $500, and long term debt $500. So it's 2k dollars, cash 1000, debtors 1000 $1000. So what the full disclosure principle says, let's say if the entity has prepared this financial statements for the period for this period. Now what the full disclosure principle says that if there is anything or any matter which is required to be which is or which has potential to affect items any of these items in the financial statements, then that matter should be reported in the notes to the financial statements. Like what type of matters we can have, let's also understand. Like we can have matters like this, the capital also includes preference share capital, preference share capital, so that there is a law that requires the preferential capital redemption rules, and it also needs to be segregated into non-cumulative and cumulative dividend. So these are the matters which, if present in the preparation of financial statement, then these types of the matters must be reported in the notes to financial statements. And let's say suppose short-term debt, what type of matters we can have? Like we can have the short-term debt is going to be restructured because the entity is, although entity is having sufficient cash to pay out both of the loans in one go, but still the entity is likely to restructure the short-term debt. And what is the meaning of restructure? Just modifying the schedule of repayment of loan. So like restructure we can have. So these type of matters for cash also, we have matter that maybe the cash is not verified at the end of balance sheet by the auditor, so that these type of matter can be reported in the notes also. Same as for debtors we can have also. So that is why full disclosure. So its meaning actually, its literal meaning give all the answers itself. Like you have to disclose everything which has been presented in the financial statements. Report every matter that has potential to affect the matters presented in the financial statements. So for this for this problem, the accurate explanation in this, the literal meaning is this. However, we can also use different example to understand the same thing. But for currently, this example will be more than enough to understand this thing. So, so the correct choice for for problem D, for problem 10 is D. So that's all for the current solution. Thank you.